All right, all right. Good morning. It is Sunday, August 25th, 2024, approximately 10:43 a.m. A nice, bright, sunny day today. So lots to discuss. A lot of things I want to go over. I should have took some notes as far as everything that I want to discuss. As always, I'll try not to be too long, but long enough to get the relevant information that I want to get out today. So with that being said, let's share the first screen here. Okay. All right. So the first thing we're going to do is setup. So right now, what I've decided to do is to drill down and customize everything to daily setups to focus more so on daily setups and what that looks like as far as day trading, right? If you're not holding a trade for longer than a day, then you're considered a day trader and or scalper, so to speak, right? If you're holding trades for short term. Now, if you're holding your trades for longer than a day or so a couple of days or even a couple of weeks, you're considered a swing trader. If you're holding trades longer than that, then I forget what the term is for that, but long term trading is basically where that is. For me though, I realized that my particular style right now, because I am able to be in front of the computer most of the time, and if I'm not in front of the computer, I have the apps on my phone to be able to look at the market, right? So with that said, I consider myself to be more so day trader, scalper type, right? Because I'm looking for daily setups, and they're not always there, not every single day, but most days, there's a setup or two. So I customized all the indicators to give me that focus for daily trading and setups, right? Now, still keeping an eye on the monthly and the weekly. So as you can see, in this particular time frame continuity indicator, I'm keeping it uh, to where I can see what the monthly and the weekly are still doing. So monthly, weekly, daily, 4 hour, and hour. But for the day trading setups and everything, I'm mainly concentrating on time frame continuity with the daily, the 4 hour, the hour, and the 5 minute. And I'll show you what that looks like with another indicator that does the same thing that this one does for the most part, but it gives you you can see below the 1 hour. On this one, I do not believe it goes below the 1 hour. So in any case, like I said again, this allows me to keep track of where the monthly and the weekly are. Now, for this indicator for the dashboard, remember the purpose of this dashboard is to keep track of multiple assets at the same time. We can do up to 10 assets. I'm only keeping track of 8 right now. I'm looking at the pairs that I'm most interested in. So Euro USD, GBP USD, USD JPY, and GBP JPY. And then keeping track of the individual currencies themselves. So JXY, EXY, BXY, DXY, right? For time frame continuity. Because this also tells me if JXY does not have time frame continuity, but let's say DXY does, right? We see here that DXY has time frame continuity and basically it's bearish, right? Then that's a good indication that that UJ is probably bearish at the moment, right? Even if the JXY doesn't have full time frame continuity and it's bullish. Now, you'd rather see JXY to be have full time frame continuity and this be green and then this one be red, because that really tells you that you have a really strong bearish trend on UJ. That's how that works. Now, because this says no and this says yes, doesn't mean we don't have a strong bearish trend. And then the market is closed right now. So at the end of the day, we're not sure exactly what was going on. But if the market was open and you were seeing something like this, it doesn't mean you don't have a good bearish trend. It just means that GXY right now could be teetering back and forth, right? So you just got to look at and analyze where you are. Where price is at the moment with that particular pair. But when you have it to where you have, let's say, for instance, if you were trading GBP against the USD, right? We can see that GBP or the pound, right, has full time frame continuity and it's bullish. We see that the dollar has full time frame continuity and it's bearish. So when we look at, without even looking at this, I know that GU is a strong bullish trend, right? Because of what I see right here. Now, if you go to GBP/USD up here, you don't see full time frame continuity again because the market is closed, so you're not going to see exactly what's going on. But real quick, for all intents and purposes, let's take a look at GU and see what GU ended at here. All right, so as we can see, right, going back to what we were just saying, right? Very strong bullish trend here with GU. And it looks like it's going to continue for the near future, right? So at the very least, so if we get a break of this two right here, this two high, this continuation, then we're going to take out this high and then this high. So real quick, just to see how many pips would that be to get to this. It's only 9 pips, but you get the idea, right? Um, so that's what that would look like. So anyway, just wanted to share that real quick. And we can see that even down here on this indicator, we have full time frame continuity across the board. And then you can see volume. Volume also indicates, where we are in the strength of this move right here. All right, so we're gonna go back to UJ and then get into what we're here for today, everything that we're here for today. All right, so again, with concentrating on the daily setups and everything. So what I did with this indicator is I took and we'll take a look at it. This is the dashboard. So we go to the dashboard and what I did was I took and made sure the time frames that I was looking at was the daily, the 4 hour, and the hour for time frame continuity. So that's what I wanted to do with the dashboard. We only get 3 time frames, so I wanted to make sure I got the daily, the 4 hour, and the 1 hour for our trade setups. So when when it says we have time frame continuity, it's basically going off the daily, the 4 hour, and the hour. Okay, so that's that one. And what I did was for for this this is my technical analysis chart right here, right? So for this chart, of course, I have the liquidity lines. And these are all the liquidity lines for the most part. I just made them all white so that they stand out, so I know exactly where the liquidity is on the chart. And then you see I have the 1 hour here, but then I also have the daily. So this right here is the daily. And we're going to go to my multi-time frame chart to get a look at what that looks like there. So, all right, so we have this here. And what we're going to do is we're going to switch to my multi-time frame chart. All right. So couple of things to parse out and break down here. So on this chart, right, the way we have this broken out now, right, is so we're starting from the daily. So this is the daily chart. So I have my eyes set on what the daily candle looks like, and I have the daily support and resistance. All right, so when we look at this, and we see, let's see, we're gonna pull this over real quick. Let me fix this real quick so we can see that daily support area. So obviously each candle represents one day. And so I know, by looking at this particular part of the chart that I'm looking at the daily candle and how it's tracking for the day. And then of course, against the support area, daily support. Over here, we have our 4-hour chart, right? And again, we have plotted the daily, support and resistance areas. Let me change that real quick so I can point out that this is the daily support and resistance, right? I have nothing else, just the daily, because again, I want to track exactly where I am as far as the daily, right? And again, you see we have volume on all of our charts as well, because we want to see what the volume looks like. Volume still plays a part in our trading setups, and letting us know the strength of moves and candles and stuff, right? Here we have our 1 hour setup. Again, typically where we're doing majority of our analysis on the 1 hour, right? So we see what that looks like there. The 1 hour, again, the daily support and resistance or supply and demand zones areas there. The same thing that we're seeing on the 4 hour and the daily, again, for tracking that daily move, right? Then, hold on, let me change this real quick. Let me update that. Then last but not least, here we have our 5-minute. This is where we're looking to do our entry setups. Again, we want our 5-minute, for the most part, to mirror as far as our areas of interest. It needs to mirror your hourly at the very least, right? But this mirrors the daily, since I'm looking to see where my daily support and resistance is coming from. So that's why I have the daily here. I want to see what price is doing when it moves into this daily area here. So what I'm gonna do is I'm gonna turn this crosshairs off quick so that I can see a bit better. Okay. All right. So that's what we have here. Now, here's the interesting thing that we have on this chart that we don't have on the rest. So for this chart, I've added one indicator here, and I'm gonna show you why. All right, so you see this box right here. So this is another time frame continuity indicator, like I said, and this is strictly utilized for my entries. Now, the way I'm looking to do my entries is, again, doing my analysis on the 1 hour, keeping track of what the daily looks like, right? And I'm gonna give you an example of what we're looking at for the next trade setup, right? But this tells me daily, 1 hour, 5-minute, 4-hour, right? And so I'm gonna tell you exactly what the name of this indicator is and how I have it set up. So it's the time frame continuity, right? Made by TFO, time frame continuity indicator. And the way I have it set up, real simple. Okay. The time frames, and you have multiple time frames that you can track here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So you can track 10 time frames at one time, right? To know if you got continuity. But for me, I just need to know the daily, the 1 hour, the 5-minute, and the 4-hour, right? That's what I'm looking for my time frame continuity and my setups throughout the day. Now, the thing to understand about the for this one, right? So again, if all of these are red and I'm looking to put my trade in, I'm looking to put a sell in, I'm great, right? But if you see here, we have the 60-minute that's green, then it may not be the best time. So I have to go look at my 1 hour chart and see why is it green and I don't have full time frame continuity. So I see that it's green because I have a 2 up right now on the hourly time frame. So I should not be putting in a sell, right? I do not have full time frame continuity. Okay. Once I have full time frame continuity, then I can start looking at the possibility of sell trades and look at what those setups look like. Now, as you notice, here on my chart here, again, just specific to this chart right here for my 5-minute, because again, like I said, this is where I'm looking to do my entries, my analysis on the 1 hour, daily and 4-hour. And I'll again give you an example of what that looks like. I also added another indicator, right? And this one Actually, it's not another indicator. It's the time frame continuity indicator. But what the indicator does is it also changes your candles. So if you have full bearish time frame continuity, it's going to be red, right? So for each candle here that I had full time frame continuity, it turned red. Now, when you no longer have full time frame continuity, the candles, which means it's neutral, right? The candles are going to be gray. That can indicate reversals. As you see, price came down here. It got into my daily support zone here, right? We came down, we created a 2 down. The next candle was a 2 up, but we no longer had full time frame continuity to the downside, right? So it became neutral. That indicated the possibility of a reversal. That's another way that this indicator can be used. Now, we see that in this up move right here, this push, we never had full time frame continuity to the upside. It does not mean you can't put a buy trade in. Again, understanding where you are in the market, right, and what price is doing, it just means that we don't have full time frame continuity, and not having full time frame continuity, as we know, can indicate that this move isn't going to go very far, right? So now when we look at, we know that UJ is bearish. We know that UJ is bearish. So we're not going to get right now full time frame continuity to the upside. So what you would look for is, we know that, so with that being said, this is a pullback. For all intents and purposes, this is currently a pullback move, right? So once we get a red candle, a full time frame continuity going back to the downside, that's when we want to look to get back into this move for the move to the downside. Okay. Once we have full time frame continuity bearish. So when we get indications on the hourly now that we're legit and everything coincides with each other, then we'll look to make our move to the downside, right? So and the reason that you're not going to have full time frame continuity, you don't have full time frame continuity, is when you look at the hourly, right? We can see that price is about to run into this fair value gap right here. So the up move can be short-lived, right? So you got to wait and see how far is price strong enough to go in and mitigate this entire fair value gap right here, right? If not, then we're going to continue to the downside. And that's what you want to look for, your setups to the downside. All right. So with that being said, the next setup that we're looking for, again, we see that we have the fair value gap right here. So what I'm looking for, and we'll use the hourly at the moment for our analysis, right? So what I'm looking for is for a indication that once we have full time frame continuity on the 5 minute, I'll look for my entries to get in on the move that's going to take us to the downside, where we are then able to take out. All right, so this is Friday, right? Where we're able to take out the liquidity here. Once we take, and I'm gonna blow it up a little bit. Once we take the liquidity here, then we're gonna look to take the liquidity here. Okay. Now, this is a lot of liquidity, and we don't know if and when price is going to take all of this liquidity. This is the daily, right? So we can take liquidity here, and then we can take liquidity here, but we don't know about here. So as I was analyzing this, I was like, well, let me look at the 4 hour. So when I look at the 4 hour, let me show you something. So we got the liquidity, right? Once we break, we can get the liquidity there, and we can get the liquidity there. Look what's sitting right there in that candle. See, we have a fair value gap. So that's a bullish fair value gap. So we don't know if we're going to be able to take any liquidity here. So what can happen is price can come in and mitigate part of this fair value gap and then push to the upside. So what we will look to do is to take profit once. So my target will be the liquidity here. So these two wicks right here, I'll look to take profit and wait and see what price does as far as mitigating this fair value gap. Now, typically, when price mitigates an entire fair value gap, again, it looks to move in the opposite direction. It fills the orders that's in the gap there, and then continues on. As you can see, Same thing happened here. Price came in, it mitigated this fair value gap to the tune of almost 80% and then pushed up, right? You can see the same thing. It plays itself out, time and time again. Now, if it depends on how strong price is, how many sell orders or orders of the opposite are available, as to whether or not the fair value gap will be fully mitigated and pushed through, and then how long it'll take to push through. So again, point being is that for the next trade setup, I'm looking for price to break this low, right? So get the liquidity here. So we want to continue to pull back possibly into this fair value gap. So here's the hourly. So pull back into this fair value gap, mitigate some of it, fill some of those sell orders that's there, and then push to the downside, right? Take the liquidity that was left over from that move on Friday. So take this liquidity here, then take the liquidity here, and then here. So that's what we're looking for the next trade setup. And let's see. So once we break this low, all right, we get that low and then that low. So we're looking at roughly a 70 pip move. So we're looking at roughly a 70 pip move once price breaks this low right here. Okay. But no guarantees after that, right? And again, this isn't guaranteed necessarily, but given our past experience on tracking these moves here, price typically will go and grab the liquidity at the end of these wicks. Again, we definitely don't know what's going to happen here, so we're going to trade what we know and not what we think. So that's what I'm looking at for the next trade setup. And again, utilizing the indicators as I've indicated here, again, right here, to get in, the move possibly. And you can take, again, you can take this indicator, let's see, this being the time frame continuity indicator, and you can put it on any one of your charts. Again, I just have it on my 5-minute chart because the 5-minute is what I'm utilizing for my entries to give me earlier entries, so to speak, right? Because I know that if I'm waiting on a down move on the 1 hour, right? Time frame continuity is time frame continuity. The hour is included in my time frame continuity. So if I'm looking at my entry time frame, my 5-minute time frame, and I get full time frame continuity, then that gives me a strong indication that I can get in the market a lot earlier. Because again, if you're waiting on the 1 hour alone for full time frame continuity, it's going to wait an entire hour before if you have full time frame continuity. So I want to track it on the 5-minute to know, do I have an entry sooner than later to get in on that down move? And that just gives me more price movement, and I'm not missing out on any pips. I don't want to leave any money on the table nowadays. So I want to get in as early as possible, as smartly as possible as well. And again, you can always look to see what type of volume you have, in these moves as you track your moves as well. So I'll do another video at some point to talk about how volume still plays a part in our trading, because it does. Volume again will give you an indication of the strength of the move that you're in. So a real quick tidbit here. So as you can see, in this down move, right, we have the volume in this down move or in these bearish candles is more than, for the most part, the volume that was in the bullish candles, right? So again, as you can see, volume dropped as the market reversed, right? So not a lot of volume necessarily. So that indicates that this pullback right here is one temporary, and it's one where there's probably some profit taking and stuff going on, which is why there's not a lot of volume. You see volume falling as price goes up, except right here. We had a little spike, right? But then right after that, right, it fell, pretty much fell off. It was the end of the day anyway, right? That's typically what happens at the end of the day. All right. So just something to keep an eye on and be mindful of as we look to get into these markets and be fruitful, right? And make money. That's what it's all about at the end of the day. So hopefully, I hope I covered everything I wanted to cover. If not, I'll do it in another video, either later today or sometime during the week. Other than that, as always, happy trading. Good luck. And if you have any questions, please feel free to put them in the chat. Thank you.